This month, I made $1,000 day trading. And just like many of you, I'm a teenager and I still go to school. And in this video, I'm going to show you guys how in 10 months, I was able to completely transform my trading. This video will hopefully give you guys some sort of light bulb moment, just like what I had, which transformed my trading. Sometimes all it takes in trading is one realization, and then in the next 2 weeks, you could be on your first payout. At the start of this month, I was down $800, but I managed to finish the month with a $1,000 payout. The plan for this video is to show you guys, first of all, the strategy I trade, so the confluences I use day to day. I'm also going to show you guys some examples of real trades I took. I'm also going to go through the 3 biggest things in my psychology that changed in order for me to get my first payout. And if you stick till the end, I will show proof of the payouts, just so you know I'm not lying. So without further ado, let's get into the video. So I use 5 main confluences which make up my entire strategy. It's a little bit more complicated than this, but I'm going to explain to you guys the basics. Confluence number 1 is daily bias, or just higher time frame bias. And this is basically going on the higher time frames and looking, does the market look like it's going up or does it look like it's going down? It's pretty simple. I'll show you guys more in depth, but a lot of you guys will already be able to do this. My second key confluence is liquidity, or more specifically, liquidity sweeps and draws of liquidity. To basically sum up liquidity, it is where price is moving. Liquidity is kind of like where price acts like a magnet towards. My third key confluence is fair value gaps. This could also be classed as 2, fair value gaps and inverse fair value gaps. So fair value gaps are 3 candlestick patterns. Some of you guys will already know what they are, but I will show you guys, if you don't already know, I'll show you guys what a fair value gap is. My fourth key confluence is break of structure. Break of structure is basically if the market's making a higher high, higher low, higher high, higher low, basically it's breaking the trend the market's in and then starting to make lower lows, lower highs, lower lows, lower highs. That basically allows me to determine which way the market is, going to move. Last but not least, my 5th and final confluence I use is SMT divergence. SMT divergence requires looking at the NASDAQ and the S&P 500. I'm not even going to try to explain SMT without a chart, but I will explain it on the charts. So let's get into some of the trades I took. I'm going to show you guys some of the best trades I took and also show you guys some of the real shit as well. All right, so we are here on the chart. As I said at the end of the video, I'm going to show you guys full proof that I actually got the payouts and that I actually took these trades. But right now, I'm going to show you guys the trades. So on the left side, we have the NASDAQ. And on the right side, we have the S&P 500, right? So what trade did I take? This is on Tuesday, the 17th of June. The trade I took was, believe it or not, well, you're going to believe it because I'm going to show you proof, of this candle, the 9:30 open. And bear in mind when I talk about these times, this is all New York time. You can come down here, select New York. That's kind of how everyone operates. Instead of talking in their own time zones, most people just choose to, stick to the New York time. So, why did I take this trade? Well, if you remember back to me talking about the 5 key confluences, confluence number 1 was which direction is the market moving in? As you can see, I'd like to think it's pretty obvious, even to someone who's never traded before, that we're making higher highs and higher lows. And if we continue this, we're probably going to keep moving up. I don't know how, but we're going to keep moving up. So when you really dumb it down, this looks to be an uptrend. So I'm really going to hone in on longs. I'm really going to favor long positions, which is buying positions, right? Same for, if we go on the 4-hour on the S&P 500, kind of the same deal. There's not much differentiation. If we go on the 1 hour, so what I'll always do is start on the highest time frame and then work my way down to the lower time frames. So now we're on the 1 hour. There's not really much going on the 1 hour. I'm not really going to explain anything on the 1 hour because there was nothing on the 1 hour. But here's where it gets juicy. So a fair value gap. I'm going to kind of quickly go over a fair value gap because I'm assuming most of you guys know. A fair value gap is a 3 candlestick pattern, right? The three candlesticks that I am talking about in this situation is this candlestick, and this candlestick. Right, that's 1, 2, and 3. The gap I'm talking about, because it's a fair value gap, is the wick of this first one to the bottom wick of the third one. And the gap is the space the second candle leaves in between, right? So that was one of the confluences I used, like, based my trade off of, right? And I only want to take the longs up to this. This is my easiest draw of liquidity, okay? I don't want to take anything. I don't want to take any longs past this point, right? So I just want to trade to there and be done. If it moves there and I don't catch it, I'm going to be done, right? What else do we have? I was talking about an SMT divergence, right? So SMT divergence was used in this trade. You can see at 8:30, we created this wick here. And at 9:15, the Nasdaq had taken that low that was made there. If we go on to the S&P 500, ES, we can see at 9:15, that low wasn't taken. That means that the Nasdaq is the lagging index. And I always trade the Nasdaq. I don't care if Nasdaq is lagging or leading. I always trade the Nasdaq. I just don't want to overcomplicate it. 15 minute. I'm taking it off the 15 minute. When I'm trading, I'm using the 15 minute in line with the 1 minute. If I'm using the 4 hour, if I'm trading off a 4 hour gap or a 4 hour liquidity sweep, I am going to go on the 5 minute. Okay? So 1 hour equals 5 minute, 15 minute equals 1 minute. In this case, we're using the 15 minute, so we're now going to go to the 1 minute. What do we have on the 1 minute? Well, I want to look for movement out of this gap, which will prove that price is respecting the gap. Here, you can see we have a breaker structure. So I could trade off that. I could trade off this, put this here, you know, hit the 1-to-1, like that. Problem is, this is pre-market. I don't trade pre-market. But upon market open, which was this candlestick, we were still respecting this gap. We were still heading up with no reason not to go further. There was no reason for us not to come to this draw. We were still, you know, sure, we had inversed a gap here, you know, we'd inversed this gap, but then we respected this other gap, and, you know, we'd already broken structure again to the upside here, even after that inversion. You know, that 929 candle closed above this high. So this was a super clean long. This was the best long I took. I'm going to show you guys a second trade. This one made me $400, but let's just get into the next trade. Moving on to the next trade I want to talk about. This time it was a short. This was taken on Friday, the 20th of June. So 3 days after the one I just showed. As you can see, another win. I know I'm only showing winners, but truthfully, I only took winners the last 2 weeks, so there are no losers to show you guys. So let's get into why I took the trade. So, starting on the 4 hour, it looks a little bit choppy. I'm not going to lie, there's not really much I can do to determine higher time frame bias, because this is pretty choppy now. There's not much clear direction as to where we're moving, right? But SMT divergence, Nasdaq, taking these highs. ES, these are the exact same highs. ES has not taken the highs. This is SMT divergence. All right, this is making me very bearish, meaning I think the market is very likely to go down. So 4 hour is where I'm looking at my liquidity sweep SMT, right? Now, 1 hour, like I said, 1 hour, 4 hour, what do they correlate to? The 5 minute. Yes. So now I'm going to go on the 5 minute, and I need to see that price is going to respect this SMT. I need to see proof that this SMT is valid. So on Nasdaq, what could I use as proof? What can I use as proof? We have this fair value gap down here. That's the first thing, right? And for this to be proof, I need this fair value gap to be inversed. So you might be thinking, well, why did you take the trade up all the way up here? You know, if you needed that fair value gap to be inversed, why didn't you take it after it got inversed here? Here is the reason. Here's the reason, okay? On the NASDAQ, in between this fair value gap and, you know, all of this range, there's no fair value gaps, there's nothing, there's no lows, there's nothing, right? However, ES did make a fair value gap. So, I can use the inversion of the fair value gap on ES, the S&P 500. I can use that and follow through with that trading on the NASDAQ. So once this candle inverses on the S&P 500, I now have proof that the SMT is valid. We're respecting the SMT that was made on the higher time frames, right? And I can enter here. I actually entered a candle earlier just because I kind of knew we were going to inverse. Like, we'd already moved down so much. This is the 1 minute chart, by the way. We'd already moved down so much that it was like, yeah, we're going to inverse. We're going to inverse, you know? So I don't even use the 1 minute. Really, I just used the 5 minute on this trade. And stops were on top of here. And, you know, take profits were down here. So that is my second trade. Let's get into the third trade I took. I did take a fourth trade, but I don't want this video to be too long, so we'll just show you guys one more trade I took. Okay, moving on to the third trade I took. This was taken on Monday, the 23rd of June, so really only last week. And this was a long, so why did I take this long? If we go, you know, start on the higher time frames, what do we have on the higher time frames? We have this 4-hour gap, right? We have this 4-hour fair value gap, and there's nothing bearish. You see here, there's nothing bearish. The next draw, you know, well, I guess on a 4-hour level, it would be this high, but obviously I'm not going to target that high. So if we go into a more realistic level, the nearest draw was, oops, this high on the 1 hour, right? This high on the 1 hour. So we've got the 4-hour gap, nice. If we go onto the 15-minute, let's zoom onto the 15-minute. This was probably the cleanest trade ever taken. You can see, right, the NASDAQ, it takes this low, 745 low, taken on the 930 candle. You can see, clear as daylight, this 745 low was not taken by the S&P 500. And considering when I go on the 4-hour, my higher time frame is very bullish, we can be like, okay, we can probably take longs, you know, expecting to hit this draw. Do we end up hitting this draw? We end up hitting that draw. I don't want to trade all the way to the draws. I don't want them to get edged. I just want to take my one-to-ones and be out that there, okay? Matter of fact, it was here. This was more accurately the trade. So now what do I look for? We've got the 15-minute SMT. The whole high time frame is bullish. We've got the bullish SMT, like I just said. What am I looking for? Signs that the SMT is going to be respected. This is the first sign that the SMT is going to be respected. This is the first sign that this sweep of liquidity is actually going to be a sweep of liquidity, right? So what do? I enter off the inversion of that fair value gap. The candle closes through it, and I enter. Pretty simple. You can see all the trades are basically the exact same kind of thing going on in them, right? So that concludes showing you guys the trades I took. I'm talking about the strategy. I'm just going to show proof now. Fuck it, let's just show proof now. Well, okay, this is my evaluation. I took a trade on Friday. I just made almost past 2 new evals. You can see, I was talking, the first half of the month was a little bit rough. But the second half, you can see I took 0 losers, 4 winners, and then the 5th one on the eval. So you can see the trades I showed you guys. Tuesday, 1. Friday, 1. And Monday, another win. And Thursday, another win. But I'm not going to show that just for time's sake. So you can see I'm actually proving it. And at the end of the video, I will pull up screenshots of the actual payout requests. So now we've been over the strategy, we've been over the trades that I have taken, but now I want to let you guys know about the psychology And if you've made it this far into the video, well done, because this is literally the most important thing. This isn't going to be like nice for your dopamine, like seeing the trades and seeing the proof. This is going to be real shit, which will actually help you. So the first key thing that had to change in my psychology is less is more. Now, what do I mean by that? Less is more. That doesn't mean sleep in while the market's open. It doesn't mean that. It means less is more means stop revolving your life around trading, you know? Stop doing so many hours back testing, you know? I used to do maybe 4 hours of back testing every single day. And do I think that's maybe necessary for your first month of trading? Yes. But if you've been trading for longer than a few months and you know your strategy, I'm not saying something like backtesting isn't useful, but I'm just saying just do it in 15-minute or 30-minute intervals and just do the previous week, because all this backtesting you're doing is just rotting your brain. It's not giving you a rest from the charts. I always like to compare trading to the gym. So would you go in the gym every single day, 7 days a week, first of all? No, you wouldn't, because your body's going to get tired. Same thing with trading. Your mind is going to get pretty tired if all you're doing is looking at charts all day, right? And same thing is, even if you just turn up to the gym 5 days a week, that's a good amount of times, I go 5 times a week, you wouldn't spend 10 hours a day lifting the weights. Same way you shouldn't be looking at candles for 10 hours a day, because you're going to get fatigued. You're going to start making worse choices. In the gym, you're going to be more prone to injury, more prone to probably not putting on as much muscle as you'd like. In trading, you're going to be more prone to making fuck-ups, you know? More prone to injury in trading, injuring your fucking mind and having to deal with the psychological warfare of being like, I just made the dumbest mistake. It's like, in the gym, you probably shouldn't be in the gym for longer than an hour and a half. No, I'll stand by that. You shouldn't be training for longer than an hour and a half. In trading, you shouldn't be looking at the charts for longer than an hour and a half a day. Trade one session, maybe do back testing on the weekends. That's enough. That is enough. Please stop watching loads of YouTube videos on trading. I know you're watching this, so it's kind of ironic, but just tone it down a bit. Do a bit less. And I kind of just mentioned it in that point, but the second point I want to make is stop revolving your life around trading. What do I mean by this? Well, I mean things like a morning routine. Don't have a 2-hour morning routine that you absolutely hate just to get ready for trading. If you look back at videos of me from 2024 and maybe January and February and March 2025, I would have these crazy morning routines like cold shower, meditate, stretch, cardio, waking up at like 4 a.m. This shit is just going to make you be more likely to take a trade. And guess what? There's only, on average, maybe 3 good trades a week. So you're going to be way more likely to start taking shitty trades because you've just prepared to take a trade. You've prepared yourself for the market. And honestly, getting out of bed 15 minutes before market open and trading in bed is probably better for you than having this whole fucking morning routine revolving your life around trading. All right? Like, I'm not saying don't be disciplined outside the charts. I'm not saying that. I'm just saying, like, I'm more disciplined than the average person. I know that. I'll say that. But the stuff I discipline myself with is stuff I genuinely want to do. I genuinely enjoy it. For example, this week, I've been doing an hour and 20 minutes of cardio each and every day. Do I hate it? Not really. Do I want to do it? Like, do I really want to do it? Sometimes not. Sometimes not. But overall, you know, I do want to do it because I want to get in shape. I enjoy, you know, getting leaner, right? But something like forcing myself to do a cold shower or meditation, like, why? Like, I don't enjoy that, and it's not benefiting my life in real time. Some days I'll wake up and I'll be like, you know what? I kind of just want to sit and meditate for 10 minutes. I'll do it now and again, fine. But just stop doing shit you fucking hate to do. Like, especially before you trade. Live a disciplined life, but live it in a way that you actually enjoy it, you know? There's no point hating it. And in my opinion, that shit's just going to made you take worse trades, you know? Just do stuff for the love of doing it, in my opinion. Another key thing, and probably the final thing I want to go over, is please, please, please just accept every single loss you take without exception. Without exception, just accept every single loss you take is your fault, not the market. And you might be saying, well, actually, my strategy doesn't have a 100% win rate, so some losses are gonna be actually good to take. I know people who make $10,000 a month, more than that, every single month, and even they'll take maybe 1 or 2 losses in the month, and they will still find a reason to be mad at those losses and blame themselves. So why the hell do you think you've got 0 payouts, you can barely pass or can't even pass your evals? Why do you think you shouldn't be taking accountability for every single loss? I see it way too often in the Discord. People will post something, I'll go, this looks like FOMO. It looks like you're coping on the caption you've put. And they'll go, nah, I followed my strategy. All my days! This trade looks shit. You've had 5 people tell you this trade is shit. You're not some Sigma for saying, no, I know it was a good trade. It wasn't a good trade. Just listen to the advice you're being given. You're trading fucking 20 time frames. You're taking fucking trades off the 1 minute only. Please, just accept you're wrong in a lot of situations, you know? And especially if you're in the Discord, which I'm going to do a plug now. If you're in the Discord, we can help you out. It's completely free, by the way. I'm keeping it free for the time being. If you have any issues with your trades and you want to take accountability, but you don't know what to stay accountable for, you genuinely don't know what you did wrong, join the Discord, put it in, and me or someone else who actually makes money will tell you what you did wrong. I think that's about it, but I did want to just go over how, because I know overtrading is an issue for a lot of people. This isn't a psychological tip, this is literally like a click a button tip. Please, please, please set a max loss limit on your accounts. If you're on Top Step, it's very simple. Just go to your Top Step X dashboard, go to the cog, and it will be right there in like risk settings. Please, if you're on a funded, I recommend risking 400, maximum 400 a trade, and it will just boot you off, and you will have no other option than to not trade. Please just put it on. Please just put the max loss limit on. That's my final bit of advice. Please just don't screw yourself over. There's so many people who they'll have just one crash out day and it'll fuck the whole account, but that will not be possible. I know sometimes revenge trading works, maybe the 10% of the time, but let's be real, that's not how we want to trade. Please just set the automatic, you know, account block once you hit a certain drawdown. Please just make sure you do that. And that's going to be it for this video. If you enjoyed this, you want some more videos like this one instead of the vlogs I do, if this gets 100 likes, 100 likes, I will make more of these style videos, giving like tips, just tips like I'm sat here now, instead of the more vlog chilled out videos. If you haven't subscribed, I want 2,000 subscribers, and I will be doing a funded giveaway. I will be giving away a 50k account, 50k eval account, and if you're not already in the Discord, join the Discord, because I promise you, bro, so many people, the trajectory of their lives has changed just from joining the Discord and like becoming friends with me and becoming friends with other people in the Discord. So thank you guys for watching. Hopefully you like this style of video. See you guys for the next one.